Hello everyone, how are you doing? Oh, okay. Hope it's good. Everyone is doing well. Students were showing me the screens that I was showing to ACCA officials right now. Okay, so let me know if there are any confusions from the previous sessions. Yes, Hamza, Alhamdulillah, I'm perfectly well. Kausa, are you have you joined our WhatsApp group? Let me know if you have already. If no, our WhatsApp group is already full. You cannot join it anymore. But I formed another group. You can join that. All right, so let me know if someone is facing confusion with any previous sessions. Otherwise, we are moving towards consolidation today. Okay, so there we go. I have shared practice one question with you. Let's start solving that. Here we are. Let me know, is my screen well visible to you, or should I zoom it a bit? Okay, Sarita. Okay, Hamza. I didn't knew that, but thank God our voice was not audible to you because we were discussing with ACCA officials. Okay, so the main question, that is question number one, that would be 30 to 35 marks long, rewarding. The main confusion that you people are facing is regarding the uh, am I audible? Like it's showing me that my mic is muted. No? Can you hear me? Yes, okay. No difficulties. Fair. Okay. Thank you. Thank you, Hamza. Fair, Junaid. Thank you so much, Junaid. All right. So we may possibly face questions in section number one. The first question will definitely be from the business combinations, and we have gone through many topics. Like you people have gone through many topics, like consolidated statement of financial position, where in SBR we get many subsidiaries, more than one, and these may be complex groups, D shapes, or the vertical group. Hi, Sakib. How are you doing? So here I have formed a question for you. Let's start reading this and we'll be solving it. For the computer-based examinations, we'll be getting on the left side a background, then some exhibits you can see on my screen, the background and some exhibits and requirements. Hi, Nalidi. Hope you are doing well. So depending on the requirement of the question, hello Amna, you will be given word processing option or spreadsheet option, or may possibly be getting both options. So any question requiring you to perform calculations and also explanations, you'll be given both options, spreadsheet and word processing. Hello Ola, good evening. Okay, I'm sure that you must have gone through that platform, practice platform of ACCA. Hi, Tala. Good evening. And what should you actually do that rather than practicing your questions on the Microsoft Excel, you should better be using the platform provided ACCA, because this is ultimately where you're supposed to attempt your exam. I have heard many students complaining that the screen size disturbs, because we get to see the answer on the half of the screen and the question on the half of the screen, and we get other half of the screen to answer. Akis, hello, welcome, welcome. So if you have already practiced with the platform provided by ACCA, there are very few chances that you might get some troubles regarding the screen management. Good day, Kai. Yes, yes, Tala, we can obviously. But if you are answering same question and you are performing calculations on spreadsheet and describing your answer on word processing, you can simply keep it that way. The examiner can check it itself. Same hub, Aparna, it's same. You can see, like initially, you'll be giving like getting these instructions if you have gone through the specimen provided by ACCA. No, you're not supposed to rewrite, Rohan. If you are getting both options to answer the same question, you can simply solve your calculations on Excel and discuss your answers on the word processing. Yes, yes, good, good. Mohammed. Mohammed is telling that we can refer the examiner that see a spreadsheet for calculations. Like you normally perform the ratio analysis or the interpretation, we normally refer to the appendix. So that is the same case. You're not supposed to re-perform the calculations in word processing, and copying pasting will still take your time. Kausar, I'll be sharing that with on you on WhatsApp group if you are there. If you are avoiding use of WhatsApp group, then I can share on your email as well. Akis, never try to perform calculations on a word. Perform calculations always on spreadsheet. You know this why? Because we can apply the formulas and any mistake can be corrected by simply correcting one error. Okay, so my WhatsApp number is, let me share again. Visible? No, no, no. They will not. ACCA examining team will not penalize you for any technical issue. If you have performed your calculations on word processing, that will still be acceptable, but this will be very time consuming. Believe me, this will be very time consuming. So if you are assuming that you will be performing calculations manually on your calculator and simply copying the figure over there on the word processing, this will take lots of time. Yes, Sarah, perform calculations on a spreadsheet and describe on word processor. All right, Avinash, typing errors are all right. ACCA will not deduct a single mark for this technological change. Okay. Hamza is telling me that he had a passport size Excel sheet for your performance management paper. Were you attempting it at home remotely? There are some problems in the centers as well. Like, I cannot deny, I cannot support that. So I have heard that many students keep on complaining about short screen. You have to manage simultaneously both questions and answers on the same screen. Exam center. Oh, so the screen was uh, quite small. Very right, Akis. For the calculations, see, we are technologically advanced. See, we are technologically advanced. So Excel is there to reduce our time and efforts. It is better if you use that spreadsheet. Wherever here as well, we have shifted from remote to center base again in Pakistan as well. Exactly, Dhani. But you can see, like, on my screen, you can observe something, that I have a requirement here where for one requirement there are two response options. Fair? There are two response options. For the strategic professional papers, screen is very flexible. Like, you can see, everything will pop out, and the pop-up is easily manageable. You can put it anywhere that suits your requirement. Zayan, no shortcuts, only sum, division, multiplication, and minus, nothing else. You cannot put any technical formula, you cannot use any technical formula that is comfortable with Microsoft Excel. Remember, this is not Microsoft Excel. This is a spreadsheet of Pearson view. Yes, Diane, many things can be calculated easily. Remember one thing, if you have performed calculations and you identify that you have made a mistake somewhere, try connecting sale values. Don't keep every sale value isolated. If your sales are integrated, correcting one sale value and correcting one error will correct all your errors. And even the examiner, while marking your paper, will observe that you have made a mistake somewhere. The examiner will correct it. After penalizing you for that error, the examiner will correct that. And having corrected that, the rest should go in straight. Like, say we draw statement of profit or loss. Let's say, for instance, if we draw statement of profit or loss and you have mentioned any income or expense wrong, the examiner will penalize you once for that mistake and correct it. If your sales are integrated, the income statement will go straight and everything will be in its place. After correcting just single error, you will be getting full marks for rest of your solution, and you'll be penalized once for a mistake. Sure, Junaid. You can, Rohan, you can use some function. There is no formula for minus, of course, in Excel. You're supposed to use that minus sign. I don't think that could work. Let's try. See here, if you wish to avoid the pop-up screen of the requirement and you are coming here over the word processor, you can enlarge it. Here, there you are. I have tried to paste it, but I'm getting no option here. Okay, let me try again. The screen is not manageable for me because I've got many windows due to this GoToWebinar. Okay. There we go again. Select it, copy. Okay, worked. Control V worked. So if you are trying to minimize the window of requirement, this is helpful. True that, Ola. The calculations will only be in question number 1. For rest of your questions, there would be double entries only, and double entries can be easily performed on word processing. Yes, Sarita, that worked. Control C and Control V worked, but the right click was not working. Nanadi, no. We are not going to do this question. This is just a specimen and showing you the features of this CB examination. Yes, Ola said that we'll be getting calculations in first question only. Yes, that's fact. And using keyboard is working here. That I tried to copy requirements to avoid an extra pop-up and tried pasting here on the word processing answer. Now I am able to write my answer and requirement is right in front of me. So in case I keep a pop-up of for the question, I'll be having difficulty to manage the screens. So this can be a good idea. Here's the word processing. You can see I can use both these tools simultaneously. But there are no border shades. Majority of you students try to do what? Try to do put border shades, but border shades are not available in the option. Sabina, that is not necessary, but that's always helpful for the examiner and for the student as well. Double entry is not necessary, but it is always helpful. When you are comfortable with performing these double entries, that means you are logically correct. Okay, so what features can we see here? This one is to copy something, cut, paste, highlighters, zooming, font size, bold, italic, underline, fair, font color, background highlighter, these alignments, decimal places, percentages, and all this. Clear with this? Majority of the students try to put plus as plus, like I keep 50,000 and I want to put 40,000 in minus. So this is showing the decimal places. Using custom, you can show it is a number and negative answer should be shown in brackets. Jaya, for calculations, spreadsheet is time saving. But for theory, of course, if you are supposed to perform calculations and describe simultaneously, this is what we are usually supposed to do in consolidation paths, then it is better to do everything on a spreadsheet, because switching the tabs will take lots of time. You can see now these 40,000 are in minus. Normally, if you remember, in Excel we can use alt equal to put some formula here, but it's not working. So you can simply put some formula and select your sales. Sakib, you can, but you will not always be having option of spreadsheet. Let me show you this. For the questions are having theoretical requirement only, right? For the questions with theoretical requirements only will not give you a spreadsheet as an option. Very difficult to manage my screens there because I've got plenty of windows. Okay, closing this. You can see each requirement I'm clicking, it's popping up. When I close this, this will automatically be saved. Let's see the next question. Disappearing. Okay, so you can see here who was asking about this. Okay, Sakib. Sakib, you can see this. I am not getting a spreadsheet as an option here, right? The only option that I'm getting is word processor. So you were asking that can I attempt entire paper on a spreadsheet? Unfortunately, you cannot. Yes, but if you have got both options, you can use a spreadsheet. Of course, you can use a spreadsheet, but don't try to manage the sales. This will take lots of your time. You cannot merge the sales. True, Aparna, every question has its own pop-up. Like I clicked exhibit number 1, exhibit number 2, and exhibit number 3. Requirements, right? So it's of course not suitable to keep all the exhibits on the screen, but each item you are clicking will pop up. So this is quite easily manageable for you to use it or close it and adjust the screen. Zayan, it is good idea that you can use a spreadsheet for consolidation questions. But this would be very surprising for me if you are seeing this screen for the very first time. Yes, true, Ola. Requirements are mentioned as this. Normally, each exhibit provides you the details, and for each requirement, you are supposed to perform some calculations or describe. Please, I request you to perform these calculations or answer your questions and practice your questions using this platform provided by ACCA. You must not be very new to this screen because this will take lots of your time. Yes, Ola, this would be better like if you are supposed to answer the first requirement. So opening the word processor, you'll mention here that you are solving question number 2, requirement A, and putting your requirement here. Like we often get to like feel the need to read the requirements again and again. So the requirement will be right there in front of you. It's good idea to copy and paste the requirement with your answer. That same case here, Jaya. Although ACCA Pakistan switched to CBE due to remote examinations earlier, try not to, Rohan, try not to use bullet points, but make paragraphs, right? Make paragraphs because this is comfortably readable for the examiner. If you put your entire answer without making paragraphs, that is very difficult for the reader to get through it. Zayan, I can, not a big deal, solve it, and you can share on the WhatsApp group. I can mark it because I just mentioned that we have gone through the train the tutor activity, and we got many students scripts to answer it, to mark it. So we are working as a community on the WhatsApp group. You can share it and I can mark it. When you're Tala, you're asking how long should the paragraph be. When you're done with your point, you are about to talk about something else. Press enter, leave a space, and start next paragraph. Because if examiner gets to see everything in the same paragraph, the reader loses its interest. So making paragraph will make it easy for you and examiner. Zayan, we were getting these mocks to answer, but that activity has ended. Try sending it to me, not exactly not exactly marking it, but I can just tell you the pattern that you have gone through is suitable for SBI. I can highlight. Right, Daniel, the way you answer a question, the wording you use, the way you draft it must not be childish. Mainly, try to use the language used by the standard itself. If I ask you to define an asset, you must not be using your own language to define an asset. Similarly, you have gone through the summaries of IFRSs. Try using the language that is mainly used by the standard itself. You'll be getting the professional marks. Fair? So you are requested to use this platform for practicing your questions, as you'll then be observing the do's and don'ts. Ola, can you please clear your question? If I refer some words but not entirely, not exact definition. Yes, you will be penalized. Remember, IFRSs and IASs are law for us. As the law is for the lawyer, IFRSs are our laws. We cannot use our own language when defining what an IFRS or IAS says. It's better that you use exactly the same language as used by the IAS or IFRS itself. Fair. So I'm closing this now. I'm using that Excel sheet to answer the question. I'll appreciate if you could participate with this with me. Kausar, you can share the screenshot. I can see what error are you facing. If you're not able to access the spreadsheet, you can share the screenshot on WhatsApp. All right, let's start solving this. Targaryen Limited. Okay, you don't know the link. It's very easy, Kausar. Simply go to my ACCA and follow the past papers at the bottom. Or let me send you direct link here. I have sent you link here. All right. Targaryen Limited has investments in following companies. There are Baratheon, Lannisters, Mormont, and Baratheon again. So effectively, there are three local companies. And one foreign company, that is Tarly. Holding by Targaryen in Baratheon is 55%, 60% in Lannisters Limited, 90% in Mormont, and as at 31st December 2019, right at the year end, we have acquired further 20% stake in Baratheon. Avinash, this is not any paper. This is my question. I have drafted it myself. So this is not any past exam question of SBR, but the format I have used is the one of SBR. I'll be sharing this question on WhatsApp, or I've already shared it on WhatsApp, and you can find it here as well on the handout section. Yes, Daniel, fan of Game of Thrones. I've just started watching it, but have reached season 7. Just started watching. Fair. So you can observe on January 1st, 2015, we acquired 55% shares of Baratheon Limited. On January 2019, we obtained 60% holding of Lannisters Limited. On April 1st, 2019, 90% of Mormont. On the right side, you can see the goodwill calculated for Baratheon Limited is $130 million. Goodwill calculated for Lannisters Limited is of 60% holding, and the goodwill is $220 million. Are you clear about the bargain purchase? What is bargain purchase? Very nice, Akis. Negative goodwill. So we can understand the term using negative goodwill, but the term used by the standard is bargain purchase. Correct, Jaya. How do we treat the bargain purchase? We treat this as a gain to profit or loss. Very nice. Paid less than the net assets fair value. Good. And this is credited to the profit or loss as an income. Very nice. So for the investment in Mormont, there was a bargain purchase of $60 million. Right at the year end, 31st December 2019, we have acquired further 20% in Baratheon Limited. A quick question. Should I need to recalculate the goodwill? I had 55% in Baratheon Limited earlier, and I have acquired further 20% in Baratheon. So now I own 75% of Baratheon Limited by end of the year. Very nice. Only one person has answered that goodwill should be recalculated. Sarita, it is a step acquisition, but no change in control. Very good, Ola. So goodwill is not supposed to be recalculated, of course. That is just decrease in NCI. Nice. Transaction within ownership. Sakib, good. Moving forward, we acquired a foreign subsidiary, Tarly Limited, on 1st May 2019, and we acquired 70%. Mojisla, this is not equity accounted. See, I already own 55% of Baratheon. I have acquired further 20%. So I had the control earlier. I have maintained the control now. So this was already consolidated. This is movement in equity. Good, Zayan. Very nice. Ola, here you can see that we have acquired Tarly Limited 70% shares, and the column it is mentioned is a foreign subsidiary. We purchased 70% shares of Tarly on 1st May. No. This is our investment further, Hamza. This is not closing balance. We have maintained 55% and we have acquired further 20%. So our control or the ownership interest has raised from 55 to 75. Foreign subsidiary, but the goodwill remains a question mark, right? For rest of the acquisitions, the goodwill or bargain purchase has already been calculated. A draft consolidated statement of financial position of Targaryen Limited and its local subsidiaries as of 31st December 2019 is as under. Yes, Dayan. We treat negative goodwill or bargain purchase as an income because you have acquired subsidiary at a cheaper value. Ola, we haven't even calculated the goodwill for Tarly Limited. The question will require you to calculate the goodwill, and of course, you are supposed to retranslate the goodwill at the closing rate. Through that, I second. Now you can see the draft consolidated statement of financial position of Targaryen Limited and its local subsidiaries only, right? The consolidated statement of financial position does not include Tarly Limited, right? Okay, so we had what? Property, plant and equipment. How much is value of goodwill? 350. How 350? You can see this. We have got 130 for Baratheon, 220 for Lannisters. Can I net off the negative goodwill from this? Would you support this? No, of course, because bargain purchase cannot be net off, and that is separately shown as an income. So goodwill shown in the draft SOFP is 350. We can see how. Moving forward, investment property at what? Fair value, right? Investment property at what? Fair value. You do remember the rules of IS 40. If I carry investment property at fair value, am I supposed to depreciate it? If an investment property is carried at fair value model, do we depreciate it? Excellent. Only revaluation. And where does the gains and losses go? Directly to profit or loss. Very nice. Fair. Very nice. So you have responded me very well that investment property carried at fair value, the changes are taken to profit or loss and no depreciation is charged. Good. Let's go ahead. We have got financial investments. These are carried at cost. We have invested 100 million foreign currency units. We have invested 100 million foreign currency units in Tarly Limited. So, and we have recorded at $2,000 million. Except this, we have invested 20% in Baratheon Limited and recorded $120 million as an investment in Baratheon. But Baratheon is already our subsidiary. We cannot show investment in subsidiary in the consolidated statement of financial position. Can you specify double entry for subsidiary to subsidiary change? Uh, Amina, I have mentioned FCU as foreign currency. Assume these are dirhams. Assume these are dinars. So FCU is foreign currency unit. Good. So what we do is debit non-controlling interest, credit cash or bank, Zelna. Or if you have already recorded there is an investment, you better write the investment off. Demi, please say this. Debit non-controlling interest, credit cash or bank or investment, and any difference is treated as positive or negative change in equity, right? Any difference is treated as positive or negative change in equity. Ola, this does not go to profit or loss. This does not go to profit or loss. Tala, videos are being uploaded on the first by the second half of other day. If you are on WhatsApp, you can see that we have shared the links over there as well. Well, let's move forward. Yes, Tala, WhatsApp group is full, so I have formed another one. I'll be sharing link of that group. You can just drop me a message privately on WhatsApp number. Okay, so we cannot report the Baratheon Limited's investment this way, but let's see, we'll be making some corrections. On the credit side, we can see there are $1 share capital. We are never supposed to show the share capital for subsidiary, right? So this would be the share capital of parent only. Then there is GRE, group retained earnings, non-controlling interest, non-current liabilities, and current liabilities. Mohammed Vaid, this. Fair? Shall I move forward? Vaid? Thank you. Okay, so what's happened later? The SBR question will tell you after the background that the effects of following exhibits have not been adjusted in the preparation of draft financial statements. Number one, warehouse rented to Lannisters Limited and contingent liability disclosed by Lannisters Limited. So the company we own already, when we have acquired Lannisters Limited on January 1st, 2019, at the start of the year, we have acquired 60% shares of Lannisters Limited and we have recorded goodwill of 220 million for Lannisters Limited. But there are some adjustments supposed to be made. We have rented out a warehouse to Lannisters Limited, and there is also a contingent liability that has been disclosed by Lannister Limited. This has not been adjusted in the draft statements. Exhibit number 2 will be dealing with treatment of contingent consideration promised for acquisition of Moment. So treatment of contingent consideration promised for acquisition of Moment Limited and intra-group transaction. There are two adjustments we are supposed to make for Moment Limited. Number one is what? Contingent consideration. And number two is intra-group transaction. Next, note number 3. We have acquired additional shares of Baratheon Limited. We have just discussed it as well. And fourth exhibit, very nice, Ola. Contingent consideration should be recorded at fair value in the consolidated group, but that would form part of goodwill and the liability for parent. Note number 4, acquisition of foreign subsidiary and its functional currency. This information should be used to answer the questions requirements within your chosen response options. And we'll be getting a spreadsheet as response or word processing as response. Let's immediately see what the requirements are. The question requires us to draft an explanatory note to the directors of Targaryen Limited addressing the following. Number 1, how the investment property owned by Targaryen Limited should be treated in consolidated financial statements and contingent liability disclosed by Lannisters Limited will affect them. Number 1, you are supposed to discuss how the investment property, the warehouse, should be treated in the consolidated statements and contingent liability. So the good idea is what we were discussing, that we'll copy and paste the requirement, right? We'll copy and paste the requirement. Let me do this. Sorry. Yes, George, you are supposed to follow the format. We'll start solving it right here. So this was a good idea. Copied it. And when we'll be responding to exhibit number 1, my God. Okay. So I have copied and pasted the requirement here. What is the next requirement? Discuss the treatment of deferred consideration shown by accountant in draft consolidated statement of financial position and quantify impact. I believe there is a typo. I have mistakenly written as deferred consideration here. It is, sorry, it is not deferred. It is not contingent. It is deferred. Okay, fair. I've corrected it. So it is a deferred consideration, not a contingent consideration. Ola, quality means the wording that you use. Okay, so what are you supposed to do is discuss the treatment of deferred consideration shown by accountant in draft consolidated financial statements and quantify impact. B2, explain and calculate adjustments for of sale of equipment by Moment Limited to Lannisters Limited. So let's start working on this idea. Copy the requirement. And paste. It's not working here. The spreadsheet was better than this. What if I put here? Uh-oh. It's not working here. So I'll be referring to the requirements in the separate section. Yes, Zayan, contingent consideration is reported at fair value and as a liability as well. But this is a deferred consideration, not contingent one. Then requirement is how acquisition of additional interest in Baratheon Limited be accounted for. Merge cell like this. Oh, thank you. This was helpful. But the requirement is not totally visible. Wrap the text. Okay. But no, this is not working, right? Well, leave it. We are not turning this spreadsheet. Okay, like this. Wrapping text, merging, and pasting. Oh. Pooja, that is disturbing the question format. Fair. So this would not be the problem we'll be facing with the spreadsheet in ACCA, of course. So let's move forward. I'll zoom it, Zayan. Let's read the requirements first. Then we are supposed to do what? Translate the financial statements of Tally Limited for consolidation and show how translation gains or losses to be reported in the statement of profit loss and other comprehensive income. Good. Exhibit number 1. Visible? Read it and suggest me a solution. It says investment property represents a warehouse that is owned by Targaryen Limited and has been rented out to Lannisters Limited on 1st July 2019 for 9 months at a rent of $2 million per month up to 30th June 2019. The warehouse was rented out to other tenants. Carrying value of and the remaining useful life of warehouse on 1st July 2019, 6 months before now, was $180 million and 15 years respectively. On 31st December 2009, the rent of 2 months was not paid by Lannisters Limited. Which standard do you think will apply? Zayan, you're right. No, Hamza. We are not going towards IFRS 16 here. Purest, you're not right. Akis, no. Sabina, no. Sam, no. Wahab, no. Not Ola. Samad. No. No, you are going wrong. Only Zayan told me right. Remember, investment या property held by owner right? Property held by owner for rental income, capital appreciation, or both is treated as under which standard? Is treated as investment property under IAS 40 in individual statements, even if parent has rented it out to subsidiary, but from consolidation perspective, this should be treated as owner occupied property. Yes, Sarita, I'll be sharing this answer. Therefore, IAS 16 would apply in group accounts. Easy. If company has rented out its property, that is treated as under IAS 40. No objections. But in individual statements, if we see the group perspective, the subsidiary is part of the group. So this is treated as owner occupied property. Therefore, IAS 16 would apply. Right? At what model are we carrying our investment property? We have been carrying our investment property at fair value. But as per IAS 16, if all other properties are carried at cost model, then consistently this property must also be recorded at cost model. So transferring from investment property at fair value to owner occupied property at cost model. Yes, true, Kausa. If rented out within the group, that is investment property for individual statements and owner occupied from group point of view. Let's quantify. We have recorded the investment property at $200 million, but we have to follow the cost model. And what was the carrying value of property at the date when it was rented out? Sorry. Okay. The carrying value of the property was 180 million, and 200 is its fair value. So we'll debit property, plant and equipment at how much? 180 million, which is its cost. Credit investment property. Yes, good, Hamza. Amina, you can see there is no revaluation surpluses. There are no revaluation surpluses. So if one asset of class is revalued, then the entire class of assets to which that asset belongs must be revalued, right? Piyush, can you please clear your question? Yes, yes, yes. True, Amna. That is the rule of IAS 16, consistency concept. Okay. The investment property has been recorded at 200,000, which is its fair value. Where would the gain of investment property's fair value been shown? Where would have the gain on investment property fair value been shown? Not needed, Piyush. In the first question, it's not required. Who says OCI? Demi, and since it's both so, the gain has already been recorded under IAS 40. The gain has already been recorded as under IAS 40. And I'm reversing the gain. Ola, do you mean these requirements? Yes, Jaya, want to ask something? True, true, true. Sorry. This gain has already been recorded, so we are supposed to debit it. Yes, correct, Sakib. Sorry, my mistake. No, Sabina, for consolidation only. We are not making these adjustments in parents' individual statements. As per parents' individual statements, treating the property as an investment property is fair deal. But for consolidation purposes, this should not be treated as IAS 40 investment property. Right? Fair. So we'll make this adjustment on 1st July 2019. Yes. Later on, the property must be depreciated as under IAS 16 over the remaining life of the asset, right? How much was the carrying value of property? 180. Good. So 180 divided by how much is life? 15 years. Good. And how long, since how long are we treating this as a PPE? We have rented out from 1st July. Yes, correct, Hamza. So it's for 6 months. Or you can make it like this, point half an year out of 15 years. The depreciation would be 6 million. Zayan, this is the difference. Because the property should have been recorded at cost of 180 million and you have recorded at fair value of 200 million. Okay. So the depreciation is of 6 million. How would you charge this? Debit depreciation expense to profit or loss by 6 million and crediting property, plant and equipment by the same amount. Good. No, Hamza, the subsidiary cannot record this property because this was a short time lease. We have rented it out for 9 months only. Yes, Pooja, true that. If this property was rented out for more than 1 year, then the subsidiary would have recorded this as a right of use asset. In individual statements, that was acceptable. But for consolidation purposes, the subsidiary must also make an adjustment. Should de-recognize the right of use asset and should de-recognize the liability because it's intra-group. Sure, Chesler. You can see this. Keeping it easy. How much is carrying value? 180. How much is life? 15 years. And how long have passed? 6 months. Fair? So we would calculate depreciation as 180 divided by life. This is depreciation per annum. Right? Multiplying this by half of the year. This is for 6 months. Zayan, because we have rented it out from 1st July. Before this property was rented out to other tenants. So carrying this property as an investment property before July was a good deal. Sabina, we were discussing that if the parent Targaryen Limited had rented this property out for more than 1 year, then the Baratheon Limited subsidiary, sorry, Lannisters Limited in this case, should have recorded a right of use asset under IFRS 16. If this was the case, the right of use asset must also have been eliminated, deleted, and lease liability should also have been removed. No, yes, since because this is less than 1 year, but as per principles of IFRS 16, merely 2 years or 4 years or 5 years cannot help you classify a lease being a finance lease. Yes, true. Before 2019 July, this was treated as IS 40 investment property. Even as a 31st December 2019, this is being treated as IS 40 investment property. But since this is now consolidated owner occupied property, for the rest of 6 months, this cannot be shown as under IS 40 investment property. Before this, it was a fair deal. Ola, it's very clearly written that this is investment property at fair value. We know this well, that investment property at fair value takes all gains and losses to profit or loss. Yes, Hamza, very complicated. If this was more than 1 year, then this adjustment would have been very complicated. You should have removed the right of use asset, lease liability, depreciation charged, amortization carried out, installment paid, a very lengthy calculation. Fair. Moving forward. So, keeping on describing and performing calculations, try not to set different alignments for debits and credits. Don't involve in any time consuming activity. You can see the alignment of debit and credit is straight. So if you try to do it this way, this is possible, but no impact on marks. So we'll not waste our time. True, Amna. If this was a right of use asset, then all perspectives from the subsidiaries should have been removed. True that. Moving forward. So we have cleared this, that property was classified as under IS 40 from individual perspective. Let's explain this as well. Before 1st July 2019, treating this property as investment property was fair, because it was rented out to third party tenants. It must no more be treated as investment property from 1st July onwards. Sabina, because for individual statements, parent showing this as an investment property and subsidiary showing this as a right of use asset was fair. This is what was the correct accounting treatment. In the individual statements, Jaya, no, we are not supposed to make any adjustment in individual books. Yes, Moji, you can use short forms. Yes, acceptable. Got this? Okay, what has happened later? We have rented it out at $2 million annual rent, right? It says on 31st December 2019, rent of 2 months was not paid by Lannisters Limited. But we have had Lannisters always pay their date. So at year end, there would be rent receivable recorded by parent and payable recorded by Lannisters. Since this is intra-group balance, must therefore be eliminated. Kausar, I'll be sharing a second group link because this group is full. The WhatsApp group is full. So I have made another group. I'll be sharing link with you. Please drop me a private WhatsApp message. That would be a good idea, Botsolo, if we discuss that fair value gain recorded by parent in individual statements should also be, yeah, has also been reversed. Fair? Okay. So there is an intra-group as balance as well of how much? We do not, Amna, we are not reversing in the individual statements. Fair? What is in individual statements is fair. Zayan, that is good for gaining the marks. You can write it, or you can post a double entry. Moving forward, how much rent is due? Yes, Jaya. Individual statements is listed at IS 40, and that is correct. Rent of $4 million is due. Okay, Zayan. Fine, Ola. So how are we supposed to do this? Debit current liabilities like rent payable, 2 into 2, 2 months per and 2 million per annum per month, and for 2 months, correct. And we'll credit current assets, that is rent receivable, by the same amount. Next area, it says a contingent liability Sakib, let the income and expenses be. We are only concerned with unrealized profits and intra-group gains and losses. But we can mention it. Let's see the requirement. Requirement is asked, should be treated in the consolidated financial statements. Very nice. So that would be a good idea if we also discuss that intra-group income and expenses must also be eliminated from where? Consolidated statement of profit or loss, as parent has recorded rental income of how much? We have been getting 2 million every year from July to December, 6 months of $12 million, Sakib, right? And subsidiary has recorded same amount as an expense. Fair? So that must be eliminated from consolidated statement of profit or loss. Noor, you can read this. It says on 31st December 2019, rent of 2 months was not paid. Easy? Okay. Next, a contingent liability of $150 million as disclosed by Lannisters Limited subsidiary financial statements was not included by Targaryen Limited in the net assets of Lannisters Limited at acquisition date. No. Purius is asking that should we put the currency sign? Do not, do never. Putting currency sign will not be working out the formula. Like you can see this as an example. If I type $180 million, so this would cause trouble for you as a currency to work out. Fair? So it is better not to use currency sign in a spreadsheet. Okay, fair, Borsalo. Let's put it. It's not important though, but we can put it. So debit, rental income, credit, rental expense. Fair? Of $12 million. Okay. A contingent liability of $150 million as disclosed by Lannisters was not included by Targaryen Limited in the net assets of Lannisters Limited at acquisition date. Targaryen Limited's legal advisor had at that time, when have we acquired Lannisters? Not necessary, Sabina. Mentioning that amounts are in $1 million is not necessary, but you must ensure consistency. Like putting somewhere in million figures, somewhere in thousand figures, somewhere in full figures will not be a good idea. Fair? So this would be very understandable for the examiner. You'll not be penalized for this. But keep the terms consistent. Don't change 1,000 to million or million to full figures. Let's see, when we have acquired Lannisters Limited on 1st Jan, a year back. So there was a contingent liability, but Targaryen Limited did not record it. Mad. But initially defined. As per IFRS 3, someone of you has already mentioned this, and this was a very good approach. As per IFRS 3, all the net assets of subsidiary must be fair valued at the date of acquisition, right? Yes, very nice. True that, Amna. True that, Amna. This will affect the goodwill directly. So the goodwill that has been calculated above needs correction. Let's carry on. Contingent liability must have been measured at fair value at acquisition date and deducted from net assets of subsidiary, right? Jaya, net assets will fall and goodwill will increase. Hola. You have been going right. Correct. So how much is fair value? The question specified that legal advisor estimated the value of this liability at how much? 40 million. Jaya, IAS 37 would apply in individual statements only. IFRS 3 will overrule all other standards. Please note, even the inventory of subsidiary will be revalued to fair value at the date of acquisition. When IFRS 3 talks, no other standard dares to talk, right? So here we are treating this as per IFRS 3, not as per IAS 37. Yes, all other are silent. So legal advisor estimated the value of the liability at 40 million at acquisition. And this will affect what? Goodwill directly. This liability must be reassessed at each reporting year end and any changes must be taken to profit or loss for post acquisition movements, right? So adjustment at 1st Jan 2019. What would be adjustment at 1st January? Debit goodwill. Don't even write 40M, okay? Like if you're considering of writing 40M here, it's not a good deal. Let this be a number. Good. Zayan, very right. And credit, what is the liability for? Let's set this as a provision for subsidiary. If you are following full goodwill method, date of acquisition changes will directly be taken to goodwill. Adjustment at 31st December 2019. Jaya, since we are following the full goodwill method, entire changes will be taken to goodwill. If this was partial goodwill, then only a certain percentage. How much do we own for Lannisters? It's 60%. Then 60% should have been debited to goodwill and 40% should have been debited to NCI. Okay. What does legal advisor say for the year end? At 31st December, this estimate was revised to 60 million. Very nice. has revised the estimate to 60 million, no? 60 million, right? Okay. Now, what would be the impact? Credit provision, right? Or contingent liability by 20, fair. Whose liability is this, Sam? Does this liability belongs to parent, or is this one? Jaya, if you need to confirm this, we have made this entry. Do you mean to ask the entire double entry for the goodwill? Not related to this question, right? Okay, so we'll be debiting here group retained earnings by 60% of 20 million. Yes, Amna, I mean the liability. Provision means the liability. Do you know what is the definition of provision? And how much would the non-controlling interest take? Remaining 40%. The provision is liability of uncertain timing or amount, right? So that is a liability. If you could recall back in your Cambridge studies or initial papers of ACCA or Frankfurt, there was a provision for doubtful date, but that is a wrong term. Provision doesn't mean uncertainty only. Yes, Ola, true. The proportionate goodwill is only for parent. Is anyone else facing the issue of audio? It's just Ola. Sorry, Butsalo. I believe people are responding, so the answer, the voice is well, right? Good, 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 good. So are we done this? Done with this? How come, Hamza? Your answers are going correct. Ola, the fair value goodwill adjustment should be split between NC and parent. Can you please explain your question? Try not to, Hamza. The answers you are reporting to me are correct mostly. This is my on-made question, Adesh, and I have set how many marks for this in requirement? I have set 7 marks for this. Remeasurement of what, Zayan? Remeasurement of what? Contingent liability? Remeasurement of contingent liability is always taken to profit or loss. Remeasurement of provision is always taken to profit or loss. So you can debit goodwill, group retainings here, or you can also mention P&L. right? Not a big deal. Yes, impact is same. Since we are preparing the statement of financial position, you can directly impact uh, group retained earnings. Yes, Sabina, this is a strategic paper and 7 marks are sufficient for this. If this was a proportionate goodwill, Ola, then this provision of 4 million shouldn't have been entirely charged to goodwill. NCI would also be getting an impact. But this is full goodwill because this goodwill includes the goodwill of both NCI and parent. Sure, Amna. If you are at WhatsApp, I'll be sharing this. Yes, proportionate goodwill is only for parent. So the parent would be bearing the loss of 40 million 60% only. Remaining 40 million 40% will be borne by NCI. But since we have already calculated the goodwill here, so we have added the consideration, added the fair value of NCI, and deducted the fair value of net assets. But we were wrong with the fair value of net assets only. So we are correcting the fair value of net assets only. This has nothing to do with NCI now. Next. While calculating bargain purchase for Momont, a purchase consideration of $121 million payable in cash on 31st March 2021. Let's see when have we acquired Momont? When have we acquired Momont? On 1st April 2019. And when we are supposed to make this cash payment on 31st March 2021. How much is difference? 2 years. It says this was not considered as accountant believed that this is to be an intra-group balance. Let's understand the confusion here. This is not part of our question. It is just an understanding. You have heard share for share exchange, right? What does share for share exchange mean? That parent grants its own shares against the shares of subsidiary, right? Yes, Sam. If NCI is proportionate, then this would affect the changes in net assets of subsidiary will definitely affect the value of NCI. Yes, of course. Yes, of course. Is anywhere mentioned in the question that we are using the partial goodwill method? Fair. Okay. Getting back to my question. In share for share exchange, can I say that parent gets shares of subsidiary and subsidiary gets shares of parent? Is this so? Please read my sentence again. In case of share for share exchange, is it that parent gets shares of subsidiary and subsidiary gets shares of parent? If so, then parent records investment in subsidiary, then subsidiary should also record investment in parent. Does this ever happen? Zelna, what do you mean by no? If the parent has the shares of subsidiary, yes, I agree, Zayan. These are taken to goodwill calculation later. But if I talk about individual statements, Zelna, perfect. Zelna, your answer is perfect. But this is a common confusion students are unaware of. Very good. Hamza, I agree. But if we talk about the individual statements, if parent is showing investment in subsidiary, why doesn't subsidiary show investment in parent? My question is, why doesn't subsidiary show investment in parent? Fair, Zayan. So subsidiary, do you believe is crediting its share capital and share premium and debiting what? Peter, you said subsidiary ownership is exchanged for shares by parent. Fair. Let's see, how would parent record this? When parent debits investment in subsidiary and credits share capital, share premium, right? Individual statements. I'm talking about individual statements. What should subsidiary record? Amana, we have heard there is an arrangement of share for share exchange, right? Do you mean that parent gets the shares of subsidiary in exchange of its own shares, right? Then this should mean that parent is getting shares of subsidiary and subsidiary is getting shares of parent. Isn't that so? No cash. Zayan, I'm talking about share for share exchange. Zayan, I'm talking about share for share exchange. The parent is not getting any cash. Parent is not issuing shares. Yes, this is financial asset, Ola, correct. Very nice, Hamza. So what should subsidiary record? Subsidiary should record investment in parent, credit share capital, and credit share premium. Subsidiary should also do so. No, Borsalo. I'm maximizing the confusion now, enlarging the confusion now. Remember, deferred consideration. What is deferred consideration? Parent promises to pay for share after few years, right? Very nice. How does parent record it? Good. We normally discount it. How does parent record? Debit investment in subsidiary at present value, credit deferred consideration at present value, right? And this is subsequently unbound for the discount. So what parent does? Debit finance cost every year, credits deferred consideration. Naledi, yes. Are you having any internet problem, or am I going a bit faster? Fair. How should Ola? Isn't this clear? When Okay, this is clear. Okay, good. How should subsidiary record? Please. How should subsidiary record it? Who is expecting the payment? Should I debit? Yes. So how should subsidiary record it? Debit as other receivables and credit what? Share capital, share premium. Yes, good. Okay. But deferred income is Amna, deferred income is term used for the cash received in advance. Here we have not received cash in advance. Okay, Naledi, try concentrating if you could. Otherwise, the link will be uploaded, and you can ask your questions in on the WhatsApp group if any. Okay, so this is very confusing now. Subsidiary should have recorded other receivables, and then there also should have been unwinding of discount. Have you ever noticed if this is liability for parent and receivable for subsidiary, why isn't this ever eliminated as intragroup balance? So what, Amna? If we talk about the individual statements, the parent has its way out. The parent will take to goodwill what? Only the investment in subsidiary will be cancelled against the goodwill. I agree. But deferred consideration, that means liability, will still be reported. Yes, Borsalo. Deferred consideration is promised to pay cash at a later date. Mojusola, I have promised to pay you an amount after 1 year or 2 years. Let's talk about individual statements. Zayan, what will you take to purchase consideration? Only the debit side, right? What about this credit side? Don't you report this deferred consideration as a liability in your consolidation? You're not going right. You are not going right. The only answer to my question, Hamza, this has nothing to do with NCI because I am going to pay to subsidiary, right? And I am not purchasing shares from NCI. If I would have, the NCI wouldn't have been there. No, Noor. See here. Only answer. Concentrate. Parent buys shares from ex-shareholders of subsidiary, not particularly from subsidiary itself, right? And subsidiary. Very nice, Tawfiq. This is transaction with former shareholders of subsidiary. Zayan, you are not still clear. Subsidiary will not be affected by any transaction. Shares that we have offered to the old owners, to the former shareholders, we have not offered shares to the subsidiary, right? Similarly, the deferred or contingent consideration that we have promised is with the former or ex shareholders of subsidiary. Fair. So this was part of just explanation, so removing it. This is not part of question. Right. Okay. Now, what's the case? The bargain purchase was not included. Sorry, the contingent consideration, your deferred consideration was not included because the accountant believed. Sure, Amna. Sure, Amna. Wait a second. I can copy this for you. Wait a second. Let me know when you're done with the screenshot. I can help this. Wait a second. Zayan, because we will keep on treating this as liability. Visible, Amna? Let me share on WhatsApp. Wait for a while. I've paused my screen so that you cannot see my WhatsApp. But I cannot trust GoToWebinar. You were still able to see my screen before the broadcast. Amna, have you taken the screenshot? Yes, I'll be sharing the answer. Not sure why isn't my WhatsApp getting connected here. Time. Oh, I'll be sharing it. Amna, fair. So let's not spend more time here. I'll drop your voice note. Just drop me a message on WhatsApp. I'll be telling you over there. Okay, so back here. Very difficult to manage the screen share. Where's my question? Oh, where's my question? I just lost it. Okay, fair. So what has happened that we have promised to pay $121 million to the shareholders, and we are supposed to make the payment after 2 years. The accountant believed that this is an intra-group balance. This would have been reported as a liability by Targaryen Limited payable to Mormont and a corresponding receivable by subsidiary, so assumed it eliminated. An applicable rate of interest is 10%. Do you believe that deferred consideration is intra-group? No. Why? Because it is payable by the parent to ex-shareholders, right? Deferred consideration. So, deferred consideration must be recorded as part of investment and subsidiary, and a corresponding liability must also be recorded by parent at discounted present value. At every year and subsequently, that must be compounded for interest and charged to profit or loss, right? Have I explained well? Now I'll clear the confusion of accountant. Accountants believe it as an intra-group balance is wrong, as this consideration is not receivable by subsidiary. This promise by parent to pay cash at a future date is made with former shareholders of subsidiary rather than subsidiary itself, right? That is same, Sam. Same, unwinding of discount and compounding is same. That's all same. Therefore, and we can explain that present value of consideration will affect the purchase consideration and ultimately calculation of goodwill or bargain purchase. At acquisition date, what are we supposed to record? Debit, goodwill, or bargain purchase. Let's see by what amount have we recorded the bargain purchase. We have recorded bargain purchase of 60 million. And how much is value of deferred consideration? How much amount are we supposed to pay after 2 years? $121 million after 2 years. 121. Discount factor 1.1 power 2. You can observe how are we applying power here? Caps. Right? So deferred consideration must be credited by 100 million. See the formula. If there is any doubt, let me know. So 121 million discounted present value is 100 million. But we have already charged 60 million as an income of bargain purchase. So we'll be debiting 60 million from bargain purchase and debiting it to positive goodwill rather than negative goodwill. How much is difference? 40, right? No confusions? Okay, then telling it this must be compounded for 1 year till 31st December 2019. We'll be debiting finance cost or group retained earnings. By what amount? Sakib, that is not necessary. We can simply show these double entries because we are not given how much the fair value of net assets were at the date of acquisition by the Lannisters Limited, sorry, the Moment Limited. If you had the complete data, then a recalculation would have been a suitable, even a possibility. We are not even given the fair value of net assets at the date of acquisition. Good. So we'll be applying 10%. You can write it this way or simply 0.10. Your call, right? So debit finance cost, credit what? Let me copy from here. I'm not writing it again. Sakib, I'm waiting for my pizza and I'll turn my screen on while eating it. Purist, it's same. Compounding and unwinding is same. All right. So we are supposed to credit the deferred consideration by $10 million. Noor, you can see here, applicable interest rate is 10% per annum. Let me correct. I believe the handout attached is missing this statement. It was mistakenly deleted, I guess, while sending it to the ACCA officials. Noor, can you see here? It's 10%. So please type it in the handouts as well for your future assistance. Fair? So are we done with this? Next part. Momont, which deals in office equipment, sold equipment to Lannisters Limited. Now, Lannisters is a subsidiary and Momont is a subsidiary. So this is a transaction intra-group between subsidiary to subsidiary, not between parent and subsidiary. Sold equipment to Lannisters Limited on 1st July 2019, 6 months before year end. Sorry. I'm removing exhibit 3 from here. Sure, Veth. Let me get back to the deferred consideration. Veth, you can see that we are supposed to pay $121 million after 2 years. Causa, negative goodwill for the bargain purchase is not debited. Negative goodwill or bargain purchase is always credited to profit or loss as an income. Here, I'm not recording it. I'm reversing. Sorry. I'm reversing the bargain purchase gain recorded by parent. Fair? Where are you clear over this? 121 million discounted at present value 10%, 2 years. And here is the unwinding of discount, 10% of 100 million. Costs are clear over this? I am not recording the bargain purchase. I am reversing it. That's why I'm debiting it. Otherwise, this is always credited. Fair. Momont Limited deals in office equipment, sold equipment to Lannisters Limited on 1st July 2019 for $70 million at cost plus 40%. Okay, we need to perform some calculations here. How do we record the intra-group transaction? So there are intra-group sales of equipment. What was that? Office equipment, yes. If Momont has sold to Lannisters, how much profit has been earned? Can you please help me calculating the intra-group profit? How much is intra-group profit? Waiting for your call. $20 million. It is cost plus 40%, right? Fair. So intra-group profit. Let's see. It is sale for $70 million. Okay, Sakib, hence proved, right? Hence proved. Divided by 140% because this is cost plus. And if we wish to calculate the profit, we'll multiply this by 40. Forty divided by 140. The profit is you are correct. The intra-group profit 20 million. Earned is this much. Sorry for my pronunciation about $1 million, 60 million to retain edit purchase, right? Has been credited to retain earnings. Amy, except Sarita. Eddie, focusing. Please respond. Okay. Hope it's good. Even my video is not on. Okay. I'm repeating. Eddie, you have asked a question that why haven't we debited entire $100 million to goodwill? Because $60 million as an income. Is there still a problem with my voice? Okay. Is it okay now? Is it okay now? Kinda yes. Okay, Zayan. Fair. So Ed, since we had already recorded a gain in the statement of profit or loss or retained earnings, so we are reversing it first and then going to goodwill. Chester, were you able to calculate this 20 million gain? Sure. Curious. See this. How have we calculated the profit? It says that subsidiary Momont has sold office equipment for $70 million. That $70 million is the selling price. Selling price is how much? 70. There's markup of. So in your early days, I believe you would have heard that there is a markup and margin. 40% to price. We are doing it this way. Hamza, I am not recording the bargain purchase and goodwill simultaneously because of a mistake by the accountant. The goodwill was being shown as a bargain purchase, right? The goodwill was being shown as the bargain purchase. So if I am supposed to correct the error, if I am going to correct the error, I'll be eliminating the bargain purchase first and then moving towards the goodwill. Fair? So I'm reversing it. I'm not recording both simultaneously. I'm reversing the bargain purchase first. Okay. So how much is excess depreciation now? What was the life of office equipment? As per question, it is 5 years. Fine. So the excess depreciation, like I can say the cost should have been 70 minus 20. The depreciation of 10 million should have been charged. But on 70, the depreciation of 14 million has been charged. Zayan, markup is given. We know the way to calculate markup into margin. It is 40 divided by 140. Fair. You are right, Amna. So excess depreciation is 4 million. But how long has been the time for the transaction? When did I make the sale? On 1st July. So a complete year's depreciation is not being charged, right? Altering this into half a year multiplied by half a year, 6 months, multiplied by 6 months. Fair. So by what amount would the asset be? Credited. We'll say that unrealized profit in the group accounts must be eliminated. Who has earned this? Who has earned the profit? Momont, right? And how much we earn for Momont? 90%, right? The seller is Momont, very nice. So the profit earned by Momont was 10% taken by NCI and 90% by the parent. Very nice. So how would you alter this? Debit retained earnings by 90% of URP, debit NCI. You can keep it short. NCI by 10% of profit, credit property, plant and equipment by 18 million. Zayan, it's been 6 months that the Momod has sold office equipment to the Lannisters from 1st July 2019, and company's year end is 31st December. Fair? That's it. We are done with this as well. Move ahead. Exhibit 3. Intragroup profit again, Zayan. Sure. Zayan, please read the question first. The exhibit says that Momont sold equipment for $70 million at cost plus 40%. Right? At cost plus 40%. So this is markup. We cannot apply markup to the selling price. How did we calculate this? Selling price multiplied by 40% divided by 140%. Correct, Amna. This is not transaction between parent and subsidiaries. This is transaction between subsidiary to subsidiary. But since we own all the subsidiaries, this is a straight group. If this was a complex group structure, then we would have altered the effective control. Say, if Lannisters was a subsidiary and Mormont was their subsidiary, Lannisters, then we would have applied effective holding percentage. But SBI examiner cannot complicate it that. Fair, Zayan. Shall I move? On the date of additional investment of 20% in Baratheon, the net assets of Baratheon Limited, other than goodwill, were amounting to $700 million. Right? Net assets were $700 million. Goodwill has not been recalculated for additional stake acquired. Amna, if there was a sale of inventory, then the URP could have been earned by selling it. There would have been no depreciation charged by Lannisters. No, no, no. If this was a sale of inventory and the purchaser would have recorded this as an inventory, then no depreciation would of course have been charged. But since Lannisters has started to use that machine, that equipment, they must be depreciating it. That is why we did it that way. But if this was an inventory for Lannisters Limited, then the treatment was very straight, very clear, that we commonly do. Sure, Zayan. Fair, true, Sabina. The sale can be anything, assets or inventory. Zayan, selling price should have been depreciated. Has been depreciated, right? At 7. If the if this was recorded at cost, the profit was not there. Yes, Hamza, I'll share this Excel sheet. So depreciation of 5 million has been recorded. There is a difference of 2 million. The life of asset is 5 years, right? And 6 years have passed. So the excess depreciation 2 million has been charged. Moving forward, it says we have acquired additional stake in Baratheon. You must describe it first. That further acquisition in Baratheon by parent or a Targaryen has no change in control. Yes, true, Amna. The transaction within the group, may that be between parent and subsidiary or between subsidiary to subsidiary. So this additional acquisition of interest will not affect assets, liabilities, or goodwill of Baratheon, because parent has already control of the subsidiary and goodwill was acquired when control was obtained. Goodwill must not be recalculated for the additional acquisition of interest. Right? How would we do? Only change from NCI and consideration paid is shown as positive or negative change in equity. This change is not even reflected in other comprehensive income, but equity reserves only. Let me know if there is any confusion. All right, so how much was the net assets? Yes, fine, Noor. We can say the movement in equity. Net assets of Baratheon at additional acquisition date. How much was that? As per question, it was 700 million. Sorry, Piyush, I'm not getting your question. Is it allowed to use goodwill or OCI? We are not allowed to change the goodwill, and even don't be affect the other comprehensive income. This change would be reported from one equity to another as change is as a statement of changes in equity. This will not be reported to OCI for the year. And how much was goodwill? Fair. Yes. Writing GW in case of instead of goodwill is fine, and OCI in instead of other comprehensive income is fine, and you must practice that way. How much is goodwill in Baratheon? 130. And was the goodwill of Baratheon affected? So full goodwill, we can say as per question. How much is goodwill as per question? 130 million. Right? And do remember, adjustment as per exhibit 1. You could see as per exhibit 1, things were to do with Baratheon, right? No, this was between Lannisters and Targaryen. Fine, fine. Who had the deferred consideration? Okay, Lannisters Limited. Fine. So this goodwill was not supposed to change the Baratheon. Fine. Coming here. So consolidated net assets of Baratheon are, I could apply shortcut, but in a spreadsheet we cannot. And there is no border lining, so I'm not using borders here. How would you calculate decrease in NCI? Do you remember how do we calculate decrease in NCI? Multiply by 20% simply, divided by 100, Zayan. That's not correct. How would you calculate decrease in NCI? Good, Zayan. No, who just said 20 out of 80? Sam. Sam, nice. So earlier we had how much? Holding 55. Now we have how much? 75. It's 25%, right? Motsura, your answer would have correct if I had the figure of NCI. You will divide that by 55 and multiply that by 20 in case you have the figure of NCI. Here we do not have the figure of NCI. Yes, we can simply apply that NCI has decreased by 20%. Fair. So we can calculate NCI before further acquisition. NCI before further acquisition was how much? Zayan, where are you getting 20% from? Okay. Got it. But the better idea would be, yes, fine. Good. Because we do not have the figure of NCI, so we can calculate the change in NCI directly. Sorry, my mistake. As 830 and it's 20%. Zayan, that is correct. Sorry, that was my mistake. So the change in NCI is by 166. Let me turn my webcam on. I'm having a piece of pizza now. Hope you're not hungry. Hello. Yeah. Hamza, I got thaddled today. Do you know what is Tadal? A very nice drink. Famous here in Sindh. Okay, I'm now feeling hungry. This flavor is good. Okay. I hope I'll be safe from the stomach ache. Okay, so change in NCI 166. Fine. Hamza, you cannot share your video. Good. So I have been talking continuously, but I'm not tired. You can upload pictures on WhatsApp. I can see. Okay. So we have changed NCI by this. No confusions. So debit NCI by 166. And how much consideration have we paid? That is visible in the question. Here, we have acquired Baratheon for $120 million. Fair? $120 million. Sure, Ola. See this. We had net assets of $700 million, excluding goodwill. True, Amna. You're correct. And we have net assets of 830, and we have simply calculated 20% of 830 as NCI, because we do not have the figure of NCI at the date of further acquisition. If we were given the fair value of NCI or the value of NCI, then we would have applied the formula of 20 divided by 45. But it is not applicable here. Credit investment in Baratheon, that is reported by parent at 120 million. And there is a difference on credit. We'll report this as a positive change. And this will be taken to other components of equity. Other components of equity. Sorry. There is a positive change on an equity of 46. Moving forward, Exhibit 4. Avinash, if we were given the fair value of or the value of NCI, see, if value of NCI in Baratheon was provided at 31st December, then we should have simply multiplied NCI at year end by decrease in NCI divided by NCI before further acquisition. This formula is only workable when you are provided with the figure of NCI. Zayan, you are asking why aren't we crediting cash? We have already credited cash. You can see the Baratheon investment in Baratheon Limited is debited. It is debited by 120 and cash has been credited already. So we are eliminating the investment now. Okay, forex subsidiary. What happens in this case? Because this is foreign subsidiary, we have to translate all the assets and liabilities at closing rate, right? And profit or loss items at average date. Easy. Where do we take foreign exchange gains and losses? Okay, on subsidiary translation. These are taken to OCI. Retranslation. These are taken on goodwill into OCI. Monetary assets, profit or loss, right? XDIV is exchange differences. Yes, true, Amna. Equity at opening rate. Fair. So this was a quick revision. I believe you're all familiar with this. Shall I move to the question? If you have any question with foreign subsidiary translation, 20 million foreign currency units, dinars or map, FCU. Why am I able to hear your voice? On the okay, so date of acquisition, Tardy has retained earnings of Avinash. Is it good now? See this? Because I was getting someone's voice bounce back. Fair. Is it fine now? Okay. So fair value of its net assets was equal to their book value, except for intangible asset whose fair value was higher than its carrying value by 15 million FCU. Its remaining useful life at the date of acquisition was estimated at 10 years. When have we acquired Tarly? Let's see. First May. So it's May, June, July, August, September, October, November, December. 8 months. Tarly's statement of financial position as on 31st December 2019 is as under. This is at year end. PPE 100 million FCU, intangible asset excluding the one that arose at the date of acquisition, right? 40 million. Investment property at fair value 10 million and current assets 90 million. Share capital 60. Retained earnings at year end are 42. And non-current liabilities 100, current liabilities 38. We have got rates. 1 FCU is equal to $20 on 1st May 2019, the day when we bought it, right? When we acquired the company, the rate was $20 per FCU. Fair. So let's start discussing it. In order to consolidate the foreign subsidiary Tarly, it must be translated to parents presentation currency by applying year-end rates to assets and liabilities and acquisition date rates to equity. Translation, currency translation gains or losses must be calculated and charged to other comprehensive income. Goodwill must also be calculated in FCU first and translated at acquisition date, retranslated at reporting year end. With any gains or losses on retranslation taken to other comprehensive income, right? Fair. So let's start translating foreign subsidiary. Since we are not supposed to prepare the consolidated statements, we can keep it short. Let's focus on assets. assets as per year end. The company has PPE of 100 million plus intangible asset of 40 million plus investment property of 10 million plus current assets of 90 million. We'll be adjusting what? Intangible asset at acquisition. How much was the value of intangible at the date of acquisition? It says that this was revalued and the value of intangible asset was 15 million FCU higher than the carrying value, right? We'll charge amortization as well. How long was the life of intangible asset? Its life was 10 years, right? And how long have you spent since acquisition? From May to December, 8 months, right? Divided by how many months will there be in 10 years? So we can put 8 months as 0.75 year, or you can divide the life by total months. Let me know if you can understand this formula. If no, I can change it or I can explain it. Yes, correct. It's 1. How much is expected life in months? It's 10 years multiplied by how many months in a year? Easy with this. And post acquisition period in months is 8 months. Yes, Kaushal, we can. So switching repeatedly from word processing to Excel can be troublesome for us. Or if I want to keep it in years, how much is estimated life and how much years have passed? 8 out of 12. Correct. 15 divided by 10 multiplied by 8 divided by 12. Makes sense, Ayan. True. So we can keep the figures in months or we can keep the figures in years. You can see that I'm putting minus in front because depreciation is supposed to be deducted. 15 multiplied by post acquisition period divided by total life. It's 1. So adjusted assets are 240 as reported. 15 minus 1. because I'm removing this, so I altered this. So these are adjusted assets. I'm just bolding it because we'll not be getting the borders to shade. Next, liabilities as reported. The liabilities reported as per question are 100 plus 38, right? Here are the liabilities. Was there any adjustment because of this acquisition in the liabilities? No, correct. Next, how much is share capital? As per question, the share capital is 60, right? Keeping retained earnings at acquisition. How much were retained earnings at the date of acquisition? Mentioned at the top of the question, top of the exhibit, 20 million, correct. Amina, good. So we had pre-acquisition net assets of 60 plus 20, bolding it. After this, we are supposed to charge amortization of intangible. How much is that? 1. And how much are post-acquisition retained earnings? You can observe the retained earnings are 42 at 31st December. Yes, Hamza, I have adjusted, but not in pre-acquisition retained earnings, of course. Post-acquisition retained earnings. Let me change the sequence. Let's put post-acquisition retained earnings first and amortization later. Makes no difference. So you have retained earnings of 42 now, which was standing at $20 million at the date of acquisition. What is the change in retained earnings? Correct. It's 42 minus 20. So at year end, our net assets are standing at 101. Right? Uh, 147. Like, is this right? This should balance actually. Why isn't it? To 39. What is the difference? Okay. Sorry. There was an intangible asset. True. So pre-acquisition retained earnings are 20 these are given in the question, plus that intangible asset. Why is it increasing? We are debiting the assets and crediting opening retainings. Fine. No, NCI would not be there in the individual statements. Share capital is 60 and 15. It's 95. Okay. My mistake. So net assets by 20. Net assets by 20. Fine. Amna, at the date of acquisition, there was an intangible asset unrecognized. So what we do, that there was an unrecognized intangible asset that must be measured and recorded at fair value at the date of acquisition. So this would debit intangible asset by 15 and credit pre-acquisition retained earnings by 15. This will be taken to the fair value of net assets of subsidiary. Hamza, this is not as a result of revaluation, but an unrecorded intangible asset is being recorded. Let me read the question again. You might be correct. Fair. Okay. You are right. It says that the intangible assets at fair value in excess. Good. So this should be credited to other comprehensive income. But makes no difference because we are not supposed to take any equity element of subsidiary for consolidation. Yes, because we do add this in the fair value of net assets. So this is increasing the fair value of net assets of subsidiary at the date of acquisition. Yes, Peter, you are true. But I'm trying to shorten it because we don't have enough marks available for this. But you're right. If we perform those working two at acquisition, year end, and post, then things will be easy. Okay, let's retranslate. What exchange rate would apply for assets? What exchange rate would apply? Closing rate. Good. How much is that? Nice. For equity, 1st May 20. Good. 20. In fact, we can apply directly at this value. at what rate should the post acquisition retained earnings be translated? Yes, Amna, true. Very nice. But we have got two average rates. No, Hamza. For post acquisition only, we'll apply average rate. We have got two average rate, one for 2019 and other for May to December. Very nice. We'll take May to December. We have nothing to do with January to April. Very good. So we'll be using 23 for this and 23 for this. Assets, should it be multiplied or divided? Which currency is strong? FCU or dollars? Yes, correct, Amna. If we were not provided, then we would have used the available rate of 2019. Good. FCU is stronger. Multiply. Assets, right? Pre-acquisition equity for 20. Post-acquisition. Sam, you can see that one FCU is equal to $20. $20 more quantity will be equal to one FCU. The currency with more quantity is always weak. Okay. Amortization at average date. What are we supposed to do? That we'll copy and paste the assets. What's value of liabilities? We'll find the difference Zayan. Equity items are translated at opening rate. There has been a confusion in IS 21, but we are supposed to find the foreign exchange difference. Therefore, equity items are always translated at opening rate. So I'm going to calculate the exchange gain and loss. Yes, even at year end, equity at the date of acquisition is always calculated at opening rate. Profit for the year is translated at average rate. This gives you a difference between opening and closing, and the difference is foreign exchange gain or loss. So here we are, a foreign exchange gain is $401 million. Akis, we have two rates, one for 2019, that means from January to December, and the other one is from May to December. Which period is relevant for you? We'll always be taking since acquisition to year end, and till December. From when? January or May? May to December, right? So we have taken May to December 23. Fair. So here is an exchange gain or loss, gain of 401 million. Let's calculate now. Goodwill. Consideration. Let's first calculate in FCUs. How much consideration did you pay? In a statement of financial position, we can see, okay, short periods. How do we calculate exchange gain or loss on net assets? Remember this. You'll keep opening equity translated at opening rate. Then profit for the year at average rate. The balancing figure would be forex gain or loss. And you will put closing equity here. Okay. Bursala, we are almost done, but you can get it revised if you're not active now. So this would be the difference. Fair, because these are all x's, so this cannot calculate value. Here you can see how much opening equity did you have? 95, and rate you applied was 20. How much profit did you make for the year? It was 22 minus amortization, 21. And you translated it at average rate. Closing equity is balancing figure. Like you can see, we had assets in FCU of 254 minus liabilities in FCU of 138. In dollars, we can put it very simple. How much is value of assets in dollars? 9069 minus liabilities value is 3312. You'll work out the difference as 401. This is your forex gain or loss. Bordering just for your help. You cannot do it in your examinations. Okay, let's move to goodwill now. How much did we invest to buy this? Balance sheet is showing that we have invested 2000 million. That was 100 million FCU. So calculating goodwill in FCU first. There we go. 100 million FCU. What we put later is fair value of NCI. How much was fair value of NCI? Refer to the question. Not just, Akis, if you are deducting opening net assets from the closing net assets, you are omitting the profit for the year. The profit for the year must be measured at average rate. So there must always be kept a margin of opening rate. Yes, profit for the year and average rate. What we were talking about now? Yes, fair value of NCI. So the fair value of NCI is 25.9. Sorry, 28.5. I'm tired now, I believe. So it's 28.5. Good. And how much was the fair value of net assets? There we are. Share capital of 60 plus retained earnings of 35. Right? So we have pre-acquisition net assets of 95. Zayan, refer here on the background side. Okay. That is accounted for here. You can see this. Botsalo. Retained earnings were 20 million plus intangible asset cost was 15 million. Right? So I have added here already. How much would be goodwill? $34 million FCU. Has there any impairment taken place? Thank God, no. But if there was an impairment, you will have to see when was the impairment calculated. In this case, there is no impairment. But noting here, if it tells that impairment at year end was this, if the question is specified that impairment at year end was this, then it would be retranslated at closing rate. If the question specifies impairment during post acquisition period or during the year was this, that must be translated at average rate. In this question, there is no impairment. But if there was any, you must identify whether the impairment arose at the end of the year or during certain period. So we have got goodwill at year end. Borsalo during post acquisition period, that was 23, I believe. Yes, 23. You will be using the average rate of impairment period. Okay, now let's translate this at acquisition. At acquisition, the value in dollars would have been how much? What was rate at acquisition? 20. And year end, same goodwill. And closing rate. Closing rate is how much? 24. Forex gain. Goodwill has increased from 670 to 804. So there is a forex gain of 134. Right? And where would this gain be taken? Fair. So the foreign subsidiary assets or liabilities must be consolidated as line by line basis with draft statement of financial position provided. Foreign exchange gain on translation of net assets and goodwill must be credited to OCI and accumulated in equity under foreign exchange reserves. We are done. So the requirements were how the investment property should be dealt, which was IS 40 in individual and 16 in consolidation. Deferred consideration, we have dealt with it. Sale of office equipments, we have dealt with it. Additional interest in Baratheon, we have dealt with it. And translation gains and losses. Oh, yes, yes, yes. Good highlighted. Well highlighted, Zayan. Zayan has reminded me that parent share, that is how much in this percentage? We have acquired 70% of Tarly. Good highlighted. So that is 70% must be credited to equity reserves and 30% must be credited to NCI. Fair value of net assets, Amna, you can observe this. At the top of the question, you are given that at the date of acquisition, subsidiary has retained earnings of 20 million FCU. and share capital was 60. 60 plus 20, 80. Then there was a fair value of intangible asset, 15. Right? So there are three elements. 60 is share capital, 20 is retained earnings, and 15 is intangible assets fair value. That goes 95. Sure. Fair. So webinar for today is over. Those who want to leave may leave. Zayan has asked me a question. So before the ACCA officials end the webinar out, because they must be waiting for me to end it, and that's their off time. Let's see. Zayan, if I fail to respond here, then please drop me a WhatsApp message. I'll explain you there. Dhwani, tomorrow we'll be covering questions relating to IFRSs, question number 2 and question number 3. Sure. Right after exiting this meeting, I'll be sharing this on WhatsApp. All right. Thank you so much, everyone. Zayan, see here. You are asking me to explain the calculation of intragroup. Okay. Sure, Mohammed Ved, this can be possible. I was trying not to use any ACCA's past exam question because I have made my own. So you already have your questions available over there, which you can yourself practice. So I was trying to give you something new, something different. But if there is any trouble with a particular question, you can share it with me. Amna, this $200,000, this was translated by parent in its financial position. So 100 million multiplied by 20 at the date of acquisition, because this statement is in $1,000,000. All right, thank you so much, Amna. And if you have got any confusions, you can drop me a message. Zayan, are you comfortable with this markup and margin calculations? Okay, so we have made profit of $20 million, right? But since the acquirer of an asset is not going to sell it out, but rather is using it, the profit is normally realized by selling away something. But since the company who has purchased this asset will not be selling it away, but rather using it and ultimately depreciating it. How can we see this? We can see, like understand it as an original cost and reported carrying value. Fair? So original carrying value that should have been reported. Cost of the asset was actually 50 million, but subsidiary has recorded at 70 million. The depreciation that should have been charged was 50 million multiplied by half an year divided by 5 years. The depreciation that should have been charged was 5. and that depreciation that has been charged is 7. So P&L has reported profit of 20 million and charged excess depreciation of 2 million, right? This is profit and this is excess depreciation. So net impact on profit or loss is 20 minus 2. This is reported as unrealized profit. If this was an inventory, your question is, if this was an inventory, yes, correct, which shouldn't have been recorded. But for individual statements, this is correct. But for consolidation, this is not good. If this was an inventory for the purchaser as well, so purchaser wouldn't have definitely depreciated it, right? So would have shown it at purchase cost. That is how much? 70 million. Therefore, if entire inventory was unsold by year end at purchaser's end, URP would have been 20 million. Say if purchaser had sold 60% of goods before year end, then only 40% would have been the URP. Yes, Dayan, if you are talking about statement of profit or loss, then things will be totally different. Revenue, parents plus subsidiaries minus intra-group sale. Cost of goods sold, parent plus subsidiaries less intra-group purchase. So this net effect would have been same plus URP. This would have been adjustment if we were supposed to prepare the statement of profit or loss. Sam, monetary asset is any asset. Zayan, please respond me. Are you clear on this? Very nice. Thank you so much, Zayan. Okay, Allah Hafiz. Good night. Sam, thank you, Hamza. Take good care of yourself. Bye-bye.